Hey, it's John Wolf, and I just wanted to share some of my tips and tricks and what I'm seeing as people are buying homes in the middle of this lockdown. So, first of all, a lot of people want to know, like, have home prices gone way down and smashed and crashed? And can I pick up some really sweet deals right now? Well, apparently no. And it didn't surprise some of my friends, but it actually surprised me. Other than finding projects where somebody was trying to flip a house and hard money and it's down to the studs and they ran out of money because of just what's going on outside, there are a few of those deals out there. But other than that, homes that are ready or even are air quotes livable, purchase prices are up. They're actually up substantially, and it's kind of surprising. And well, it's not surprising. So here's what's going on. Interest rates are super low. The people who have jobs can still buy houses. And there are very few people who are willing to list their house because they're afraid of allowing people to walk through their houses when they have to show their house. So most of the people who are actually listing their house are a little bit on the desperate end to sell, but not too much. But what they're getting met with if they put their homes out there is they're getting a flood of tons of buyers, very little inventory. So what can you do if you're a buyer to try to maximize yourself and get a better deal? Well, hopefully you call this awesome loan officer here and get some individual advice and get some great financing. But past that, you can't put in low offers. I mean, you can go for it, but most people don't understand the process of home buying. So what happens is, someone has an open house, people send in offers, the sellers review the offers and they really only give one person a chance to buy that house. They say they'll put someone in second. The person in second basically never gets the house. So if you get put in second on a house, keep shopping. Just keep shopping. And if they come back to you, then ask for a better deal, but keep going with it. Anyways, so you have to put in a high enough offer that your offer gets accepted. Then what happens? Well, then they want you to put an earnest money check because they want to show that you have skin in the game. But if you have a properly written contract with a good buyer's agent, the contract says that if you decide to pull out of the deal, they don't get to keep the money anyways. And past that, there's, inspection period and some other stuff where that money's supposed to actually go to the seller. But at that point, if the financing fails for whatever reason, and financing can fail for a lot of reasons, then you can get out of the contract still. They all say that if financing fails, you get out of the contract. And, people have a little bit of a misnomer. You don't get pre-qualified and then you're done. You get pre-qualified, you do more paperwork, it goes in underwriting, you do more paperwork, and then there's a checklist of more items to do, and then you're done. But it's not a one-step thing. So if anything gets disrailed later on, you almost always get to keep your deposit, and that depends on how. So how do you use that to negotiate your advantage? Well, so what's going to happen? You get your offer accepted, and then you pay for an inspection. Home inspection is probably going to cost you something like $700-800, and that's in addition to the appraisal. Remember, the appraisal is there to protect the bank. The inspection is there to protect you, the owner, or the new owner, the potential owner. But you do the inspection, and what you really want as the buyer is you want a long list of problems. You don't actually really care what those problems are. You just want the list to be long, and you want them to be expensive, because most of the time it's stuff that you don't really need fixed or is a long ways off. Oh man, the furnace only has 5 years of life on it. Stuff like that. You don't want a new furnace, you want money. So you're gonna say like, hey buddy, new furnace installed, found the most expensive quote we could find, it's 20 grand. We need you to lower the price 20 grand if you want to keep our deal. And are you gonna get all that? No, probably not. But are you gonna meet somewhere in the middle and then minimize the money coming out of your pocket? Absolutely. And just so you know, there's two places that seller concession can go into, and there's a lot more resistance for one than the other. And I'll go ahead and give you the whole inside baseball on that. So if you're in contract, you offered a price, let's just say it's 500 grand, why not? So you offer 500 grand on a place, boom, your offer is accepted, they're happy, you do the inspection. Let's say if every single nitpicky detail that isn't even really broke, if you put all those together and pay the most expensive contractor you can find to quote out, it's like 30 grand. And most people also sometimes forget that, you have to do a down payment, 5% or whatever, but there's also what's called closing costs. And if you just want a really fast calculation of what closing costs are going to be for a place in Oregon, and this does vary by the month of the year because of taxes, but basically you can look at a property, see what the yearly tax rate is on that property this time of year anyways, and let's say the tax on property is 6 grand, add $4,000 to it. That's what closing costs are going to be. Now the seller is allowed to pay all of that. They can pay none of your down payment, but they're allowed to pay all of your closing costs. Actually, if you're a veteran, they're even allowed to pay off some of your debts, which I think is crazy. But anyways, they can. So, you come up with that like $30,000 bills, and then you negotiate, and let's say you negotiate down to $12,000. So the $12,000 could either be whole or part. They give you $10,000 seller credit and $2,000 off the purchase price, or they could give you $12,000 seller credit, and we can do something like buy the rate down with the extra money, or prepay your mortgage insurance, although that doesn't really make sense most of the time. Not when you have mortgage insurance rates like Caliber anyways. But, you could do other things with that money. Now, real estate agents aren't very resistant to seller credit to reduce the closing cost of a buyer, and that's because that check doesn't come out of their pocket. Real estate agents are much more resistant of reducing the purchase price, because usually, and this isn't always the case, but usually the listing agent and the buyer's agent pay a percentage of the purchase price. That's not the offer price, that's the final purchase price. So they would much rather give somebody $10,000 off seller credit, and then they still get their full commission, versus them discounting the purchase price $10,000. Now, granted, they're still making plenty of money. There may be 1% take home of the commission off of $10,000 is like $100. Do they care a lot? No. But do they kind of care in principle usually? Yeah, usually they care in principle. So that's what you need to know. You have to win the first bid to get the second bid. And if you want to be a really aggressive buyer, and you might blow some transactions if you push too hard, but you really want to ask for the discount in the second step. Anyways, if you want individual advice to you about strategy, whether you're doing the get rich slow thing, you want to own 10 properties in 10 years, or you're just buying a home for you, smash that like button, subscribe, give me a call. John Wolf, have an awesome day. And yeah, there's my license info. Peace.